Hi everybody.
Hello.
Hi, great.
Welcome to today's webinar. I will hand it over to our moderator for the day, and that's Nour from Egypt, and he will proceed to make the introductions.
Grace. Hello, everyone, and thank you for joining us today. I'm delighted to welcome you to today's webinar discussing the reforms, listings, instruments shaping Africa's capital markets. Let me quickly introduce myself. I'm Nouruddin Sherif, the sector head of industrials at Arqaam Capital, a leading emerging market investment bank. I've been covering the MENA equity markets for more than 10 years now. I'm a CFA charter holder, and I'm currently serving as a board member at the CFA Society Egypt since 2023. With me here today, a distinguished list of speakers. So let me start off with Thapelo, Tebogo, Moribame, head of the market development at the Botswana Stock Exchange. She's a distinguished economist and financial markets expert with over 18 years of experience, spanning the capital markets development, international trade, SME financing, business development, marketing, and policy reform. Thapelo is a thought leader serving on the board of NABU Capital in Kenya and contributing to the African Securities Exchanges Association Policy and Regulatory Working Group. She is recently appointed to the United Nations Sustainable Stock Exchanges Advisory Group on the SMEs and sustainability in 2024. Our next speaker is Khalil Bawab. He's the CEO for local and regional markets at Beltone Financial Holding, a leading full-fledged investment bank in the MENA region. Khalil is responsible for leading the asset management, brokerage, and wealth management. He brings over 25 years of experience in investment banking, treasury, asset management, brokerage, and direct investment. His track record includes managing more than 38 billion Egyptian pounds in assets under management, DCM advisory on issues over 50 billion Egyptian pounds for several issuers. Bawab was the CEO and managing director of Misr Capital, the investment banking arm of Bank Masr, for 5 years. And before that, he spent 11 years at EFG Hermes Asset Management, where he served as head of fixed income division. And we also have a distinguished speaker from Uganda. We have Mr. Ssembuya Magulu, Director of Research Market Development at the Capital Markets Authority in Uganda. He brings 15 years of regulatory experience and strong passion of driving Africa's financial transformation through market-based finance. He holds an MBA in finance from Kenyatta University in Kenya, a bachelor's degree in accounting from Kabarak University, and a postgraduate certificate in the private equity from Middlesex University in the UK. He's also a CFA chartered analyst with a passion for transformation African continent through increasing access to capital-based finance. Before we start our session, let me just remind you, for all attendees who would like to ask a question, please submit it in the Q&A box. And now we are ready to start our webinar with the first question to Ms. Thapelo. Being responsible for the development of the Botswana Stock Exchange, what are the steps taken from the exchange to increase the number of listings?
Thank you very much, Nour, for that introduction, and good afternoon to everybody on this webinar. I'm representing the Botswana Stock Exchange, the third largest stock exchange in sub-Saharan Africa in terms of market capitalization. And I have been spearheading the market development function for the last 10 years. So for the purpose of context, I think I need to share a bit of information about the Botswana Stock Exchange. We are a multi-tiered market in the sense that we accommodate companies of different sizes, from large companies to SME companies, and we do offer different products in the form of equities, fixed income products, as well as exchange traded funds. We are also a multi-currency exchange. We are multi-sectoral as well, in the sense that we have different sectors that are represented here on the exchange. And when you look at the number of companies that we have about 32 equities and 120 fixed income instruments, as well as 4 ETFs that are listed in our market. And we also offer a private equity market for companies that do not necessarily want to go the route of listing, but would rather register with the exchange while they're waiting to do a formal listing. And then in terms of our presence, we have strong international benchmarks. We are a member of the World Federation of Exchanges. We are also a partner exchange of the UN Sustainable Stock Exchanges Initiative, as well as being a recognized stock exchanges by His Majesty Revenue and Customs in the UK. I'm saying this because this gives us a strong foundation as the exchange to do some of the activities that we have been doing in attracting listings and investors to issue and invest in our market. So when you look at the country itself, we have a few advantages that we ride on as an exchange in the sense that Botswana has a strong macroeconomic environment as well as management. We don't have any exchange rate controls, and this allows the exchange to sort of get companies to list here and operate in other parts of the world if they so wish, because there are no controls in terms of the movement of capital. And we also have a stable currency as well as a pension fund that supports listings. Our total pension fund is at around 12 billion US dollars at the moment. So now to get to your question, our main interest when it comes to listing is to obviously diversify as much as possible in terms of the number and the different companies that list with the BSC. And we are also looking to reduce the concentration risk, because currently we have a large counter that is listed with us being Anglo-American that accounts for a large portion of our market capitalization. So we see tremendous opportunities in listings coming from state-owned enterprises. Our government has been clear in terms of the state-owned assets that will be privatized and possibly listed through the exchange. And we've been working on municipal bond issuances with some of the local government entities that are in Botswana in order to sort of augment the fiscal challenges that we find ourselves in as a country. And we also see tremendous opportunity in terms of SME listings. SMEs are the backbone of economies in Africa, and Botswana is the same in the sense that we are predominantly an SME market. So there's been a lot of initiatives that are geared towards SME development here in Botswana. We have an SME market, and we also have initiatives that are aimed towards corporatizing SMEs so that they can convert and list through the exchange. And of course, there's the family-owned businesses segment that we have been targeting in order to convert them to list on the BSC. And then I also want to talk about dual listings. We do have partnerships in place that we are promoting. One notable partnership is the recent one with the London Stock Exchange, where we are trying to obviously work on harmonization of rules, of settlement cycles, as well as getting face time with some of the companies that are listed in our market to dual list in Botswana. So some of these initiatives have really given us great results, in the sense that we have some companies on our pipeline currently that have indicated a strong desire to list. Some have passed resolutions to list, while some have submitted applications with the stock exchange to list. So when you look at the listings environment and how we are currently working to implement our value proposition as a market, we have really ensured that we lean into our country advantages, and we have implemented a communication path with some of these companies so that we can assist them to unlock some of the challenges that they currently face in accessing capital markets. So we've done so diligently and consistently for the last few months, and we look forward to onboarding some of these companies into the listed environment. Thank you so much. I'll pause here, Nour.
No, that's a very detailed answer. Thank you, Thapelo. And sounds really interesting, to be honest. And then this follows actually to Khalil, a question on the pipeline that you might have heard about in Egypt from an IPO perspective, because we've seen a strong startup scene and VC scene in Egypt with bright entrepreneurs. So do you think this could trickle down into listings in Egypt? Khalil, you're on mute.
Can you hear me now?
Yes, we do.
Okay, the line was slightly cut, but the question I heard is about IPOs. But
Yes.
okay, top. First, let me thank you and the CFA Society for it's really a privilege to be here among peers who basically share a common mission, which is basically strengthening our the depths of our market efficiency and investability of our capital markets across Africa. I have seen and witnessed basically many developments in our markets: market liberalization, regulatory modernization, rise of local institutional capital. Is that enough? I don't believe so. I believe the next wave of capital market development will only be driven by better infrastructure, regulatory clarity, product innovation, and regional cooperation. And I'll definitely stress on regional cooperation, because our destiny for all of us, we have the possibility of not just being frontier markets.
Yeah.
We should be emerging markets developing into developed markets, and I see lots of opportunities. Talking about the Egyptian market, if you allow me just 60 seconds before I answer your question, and I'll reach to that. I believe Egyptian corporates have managed to successfully navigate any economic challenges that we have witnessed. Basically, investors realized that companies, whether they are in any sector, they managed to basically navigate inflation, navigate weaker currency. We have seen what happened. And since 2022, it reflected positively on the market. Currently, we are in a re-rating phase. We're seeing expectations of lower interest rates, which is going to unlock the value of basically of valuations. We have seen stability in the currency, actually some appreciation in the currency. So all of those angles or factors basically are going to feed into a stronger basically confidence in the market. Last but not least, we have seen monetary, fiscal, structural reforms being adopted in the Egyptian market since March 2024 onwards, whether on the regulatory level, whether, as we said, monetary, fiscal, and it's always driving us basically for a stronger market.
Yes.
Still, we have a long way to go. Our market in dollar terms was way far from what we are now.
Yeah.
So we see the opportunities. We're seeing government entities are being prepared through management restructuring, financial restructuring, governance on the target of being listed. We have seen multiple private sector, more or less listings. Most of them have been very successful. The key here is strong financials, governance, basically a higher percentage of free float to the market, blue chips or basically large cap companies that only going to be through government listings. We see that basically the government being headed by the president, the prime minister, they have a special division now, basically catering for all of those angles and basically tackling all of them. We have seen tax reforms not only for corporates or tax easing, facilitation. We seen the tax basically collection percentage in astronomical figures. And last but not least, we are hearing in Egypt that there are going to be tax reforms for investors, for mutual funds. There was basically back and forth on the capital gains tax. Thanks
Yes.
to the Ministry of Finance, they basically reached an ultimatum. There are no capital gains tax. So really that fed into the market. It was an overhang. A long story short, yes, it was taking a time, but we see it happening. A lot of investment banks have been basically checking the appetite in the market. We see an appetite in the market,
right,
locally and regionally at this point in time. Internationally, I believe it's going to happen. They're already there in the fixed income markets, and it reached astronomical figures in dollar terms. They're still believing in the carry trade, but I believe the next step is the equity markets, and we're going to see more capital inflows going forward.
Absolutely agree. Yes, that's right. And now turning to Ssembuya, so being on the regulator, on the Capital Markets Authority. So we've seen that the CMA has set an aim to increase the stock market capitalization as percentage of GDP from 5% to 10% by end of 2029, 2030 financial year. So how do you think this can be achieved?
Thank you very much, and a good evening, everyone. And my apologies, I'm not able to switch my camera on. Do take my apologies.
No.
Now, just to provide a little bit of context, the government of Uganda has launched a very ambitious growth target of expanding our economy by about 10 times, from a GDP of roughly about $65 billion to $500 billion in about 15 years by 2040. And there are a couple of sectors that are meant to drive that particular dream. The key sectors are agro-processing, tourism, mining, oil and gas, as well as science, technology. So basically, that's the macro or broad context within which the Capital Markets Authority is working within. And again, just a bit of context around the Capital Markets Authority. We are a regulator. We have a dual mandate, like all other regulators within the developing world. We're charged with regulating Uganda's capital markets and developing. So we not only regulate but also develop. Now, turning to the specific question around how we intend to basically see an expansion in market cap to GDP
Yeah.
from the current 5% to about 10%. I think I'd like to look at it from two specific perspectives. I'd like to look at it from the supply side and the demand side. Okay,
Yeah.
so from the supply side, I think what we are looking at is seeing a lot more issuances come to the market. And so the question is, how are we going to do that? There are a couple of things we have in mind in as far as stimulating supply is concerned. Key among them, awareness, very important. I think one of the challenges we realize around businesses in Uganda is that very few of them are aware of the opportunities available in Uganda's capital market. So awareness will be key to unlocking this particular opportunity that exists. In addition to that, investment readiness. I think one of the challenges that we realize around business owners and founders of businesses is issues around business readiness and investment readiness. To a very large extent, I mean, if you look at their financials, if you look at their governance, if you look at their strategies, business strategies, they're usually not investment ready. They usually won't attract market-based financing. So investment readiness through provision of business development services will be critical. And we do actually have what is called a deal flow facility, which is an investment readiness and matchmaking facility in Uganda. And the role of the deal flow facility is to match business owners and providers of capital. And before doing the matchmaking, usually the deal flow facility provides a business development services. So providing business development services will be a critical component of preparing Ugandan businesses to tap into market-based financing. Product diversification. I mean, if you look at the products that business owners can tap into in order to raise capital, they're quite limited. Okay, so that speaks to the need for regulatory reforms, providing the necessary regulatory framework to enable them raise capital using as many financial instruments as possible. So we're looking at providing a framework for crowdfunding. We're looking at providing a framework for depository receipts. You name it. So I believe if we're able to broaden the product of financial instruments available, then business owners, founders of businesses will be able to raise capital with a lot more ease and with a lot as many tools as possible. Now on the demand side for the securities, I think again education will be key to mobilizing savings from the public. I think education will be very critical. At the same time, we also believe in engaging the pension sector. I think we've had engagements over time to try and reform the pension sector in Uganda. I mean, clearly understanding the role of the pension sector in providing that long-term capital for capital markets. And we've had missteps here and there with respect to trying to reform our pension sector. But we are re-engaging based on the lessons learned over the last 15 years or so, where we failed to reform our pension sector. We are re-engaging with the idea of reforming our pension sector, and we believe if we succeed in reforming our pension sector, that should provide additional pools. That should provide additional pools of savings that can then be channeled into, or that can then be channeled into the capital markets as long-term capital for businesses. The other game changer that we believe will be critical to this particular goal is technology. Okay.
Right.
We believe technology should be able to increase access for issuers of securities. Technology should be able to increase access for providers of securities. Technology should be able to increase, trading. Technology should be able to ease settlement, and this should drive confidence and drive vibrancy in our market. So we believe with if we deal with the supply side, if we're able to deal with the demand side, and if we're able to integrate technology as an enabler, then we should be able to realize that particular dream. Thank you.
Right. Absolutely. That's very detailed. And building on this, a question for you, Khalil, on the So we have seen in Egypt a high level of awareness given the devaluation in the local currency. So I would say the retail is now very well aware about how they can hedge themselves. So how do you think this trickles into the daily trading volumes of Egypt? And if you can share with us, how does it look from a daily perspective, institutions versus retail?
Right. يعني this phase, the market was driven by institutional investors. It's no secret. Currently, it's driven by retail investors, and it's getting stronger with higher volumes. It's not that we don't need, of course, institutional investors. They're more medium long term, but basically the deflection point I have seen is that people started realizing the difference between savings and investments. Started to basically really believe that the level of risk they're going to take in the capital markets is going to be rewarding as an inflation protection. We have seen a variety of products coming into the market. We have seen growth in public equity funds basically tripling only in the last year. Basically retail investors have been shying away from mutual funds, have been shying away from the market, and many factors led to that. Basically, inflation was one of the main factors. So basically, they saw the opportunity. Digital onboarding and eKYC, and very big thank you to the Financial Regulatory Authority for basically leading the market into that. And they have been forward-looking to that, not only on the digital onboarding, and there was a great milestone before it, is that in Egypt, only until 2018 to 20, where only banks and insurance companies were basically the sponsors of funds. Investment banks, asset managers were not allowed to issue their own funds. And placement agents were only banks.
Yes.
So basically, the market transformed. So basically, asset managers with certain criteria, of course, can act as sponsors of funds, and we have seen basically a transformation. Basically, we see 30 to 40 new funds coming into the market. We see competition. We see innovation in those products. Before that, we only saw like 1-2 funds every year for a very long period of time. I'm talking for 10 years, we haven't seen growth in the industry. The other factor is that placement agents can become brokerage companies, can become banks. And the transformation we have seen is that banks are currently signing with asset managers to become placement agents. So it's the other way around. Add to this the digital onboarding, which was introduced by the FRA and not the central bank until this point. But the good point is that the central bank announced there is going to be a digital onboarding company for the whole market, which going to take us to a new major milestone. On a separate occasion is that the FRA have been basically pushing for derivatives framework for the market. So it's more depth into the market, more basically development. We have seen new market making rules, basically liquidity provision and authorized participants for ETFs. At my company, we have been privileged to have the first and the only ETF in the market for the past 10 plus years. But honestly, until the realization of the market, of the belief in this, and the developments in the rules and the regulations, we only saw growth. We saw in the market, not necessarily at Beltone, we saw introduction of index trackers. We saw new indices being introduced into the market. We saw a new one, which is the EGX 33 and EGX 35. 33 is a Sharia compliant index. 35 is a low volatility index. And basically the cherry on the cake is that the Financial Regulatory Authority issued recently a new regulation, basically to put a minimum of equity investment for insurance companies and private pension funds who have been shying away and only investing in fixed income.
Right.
Most of my life I have been doing fixed income, but yet even most of them haven't been basically into the active management of fixed income. So it was basically passive management, just rolling over, and that's it.
Yes.
So we have seen developments on that active management on the fixed income side and equities as well. And they started basically not started. They're witnessing the development in the market, the development in returns, and its impact on performance and impact on basically the results and capital as well. So a lot is happening. We haven't basically picked up for a very long period of time, but what's happening in this era is I'm always telling the regulator, have mercy on us, because we honestly can't keep up, and that's great.
Amazing.
A forward-looking regulator is a privilege, of course.
Great to hear. We have a question from the Q&A box. I think that's relevant to Thapelo, given that she mentioned the SMEs in terms of going into listings. So the question says, I've noticed a lot of hype surrounding introduction of SME business segments and ETFs on some African stock markets, but what is the net impact on the stock market trading volumes and turnover to date?
Okay, thank you so much, Nour. I was actually trying to quickly look for the question myself, that side. So in terms of SME development, I think for exchanges, it's really important that we symbolize inclusion, which is why, we offer SME segments, and it only makes sense that we do so because African economies are driven by SMEs. So as exchanges, we have a responsibility to ensure that we cater for SMEs so that they can raise capital in a less onerous environment where the regulation is not as tedious as what you would find on the main boards and the top tier boards. So we haven't really had an SME listing this side. So the reason why is because we've had a step-by-step approach towards encouraging SME listings. I think initially we got excited that we were introducing this board and we were going to get SMEs to list. But eventually what we picked up was that SMEs were not necessarily ready to list because, first of all, I think there's this whole mystery surrounding capital markets. So we had to introduce a mentorship program, which was hugely successful. And when we look at where we took the SMEs that we have mentored so far from, some of them have gone on to, introduce boards and approach asset managers because, they had this information about what it takes to list and the entire ecosystem. And then from the mentorship program, we introduced the accelerator program, which was more targeted now, where we were working on a one-on-one basis with some of these SMEs to assist them to meet certain KPIs so that they list on the BSE. And I think I mentioned earlier on that we do have a large pension fund, which has really been, sort of a blessing for capital markets in the sense that companies are obviously able to tap into these pension fund assets. But the challenge has been that, they predominantly had mandates that were geared towards bigger companies, not necessarily SME listings. So that's one area where we've had to work on so that we can lobby the asset management fraternity to allocate some of their assets towards SMEs. And we've seen some traction in that area because some are currently working on, introducing SME mandates so that these companies are obviously supported. So that's what we've been working on. And around that as well, we have an initiative that we have started. We've started an SME fund of funds, which we hope to launch in the next few weeks to 2 months, so that we can assist companies to access capital, and obviously while they're still working on their aspirations to ultimately list on the BSC. And I think the other question was around ETFs, if I'm not mistaken.
Right.
Yeah. So we've had a lot of success on the ETF side. We do have 4 ETFs that are listed with us. Three commodity-led ETFs: New Gold, New Platinum, and the Palladium ETF. And we also have 1 fixed income ETF that is listed with us. So when you look at the statistics on our ETF side, they've been impressive actually, because we've had our ETF turnover grow by 46%, reaching highs that obviously we didn't imagine. And this was driven by the New Gold ETF and New Plat ETF. And I also need to add that BSC was one of the first exchanges in Africa to introduce ETFs. And this has been a huge success in our market. Thank you, Nour. I hope I've answered the question.
That's perfectly clear. Another question, if any of the speakers wants to jump into it, how AI is affecting the capital markets? A question from Kenya.
I have a quick answer. AI is going to affect all of our lives, not just the capital markets.
Yes.
It already did. Some people are basically resisting, afraid about their jobs. I don't believe it's a threat. It's an opportunity. It's how we use it, how we develop our policies, procedures, and so forth.
Yes.
It's never gonna impact our jobs, but there are new jobs that are going to be introduced into the market. In my humble opinion, at the end of the day, the decision making, AI is still in the early beginning. Still needs to be verified, reviewed, and you cannot rely on it 100%.
Yes.
One of the things that our regulator has introduced, and we're still basically trying to build for it, is a robo-advisory. So this is a new thing. We have been basically thinking about Beltone for smart beta funds. But to be completely honest, we need more market depths, more basically blue chips in the market, bigger market cap, higher liquidity for us to be stepping into that. Are we getting prepared for it? Yes, definitely. Not ourselves only, as the whole market, and every other market. So that's my 2 cents on this, but I'm quite sure the respectable panelists have an insight as well. I see people nodding.
Thank you, Khalil.
We're in agreement, Khalil.
Just to add on to what Khalil has shared, I think AI is going to profoundly affect all of humanity. And so we're just not looking at the capital market space alone. I think that the use cases are extremely broad, but from a regulatory perspective, as a regulator, the couple of things that keep you up at night, okay? Surveillance. How are you going to surveil the market just to ensure that the bad guys can be caught? How are you going to ease the process of regulatory filings? How are you going to undertake inspections? And I think from a regulatory perspective, there are so many applications that AI can be used for to make markets a lot safer for investors, and to enhance protection of investors and drive the necessary confidence. So I think AI is totally going to transform how we regulate, how we protect the investing public, how we approve offers. And I think the use cases are quite positive.
No, that's an angle actually that I didn't think of, but it's really interesting, to be honest, on surveillance and the impact of AI. We have a question here from Bernard saying some African economies have struggled with foreign currency shortages caused by severe capital flight. A case in point is Malawi and Mozambique, and even Egypt. We have seen the foreign currency shortages. What's the ripple effect of this scenario on the local stock market performance? I think if any of the distinguished speakers,
I could just jump in.
Yeah, sure.
And you know, without I think for the sake of you know, healthy diplomatic relations, without mentioning specific countries, I think we saw the ramifications of foreign exchange shortages on a market, a significant market across Africa. And what we actually saw along the way was that offshore investors sat out. Okay, offshore investors just won the sidelines. I mean, there are issues around repatriation, issues around repatriation of dividends, you name it, and consequently, the offshore investors actually sat out. And in markets like ours, offshore investors actually drive turnover. And so the minute you have offshore investors sitting out, then you're actually in trouble. So we actually witnessed that. Must have been about a year or two.
Okay.
Yeah.
Khalil, would you like to add on the experience in Egypt?
Yani it have been turbulent, but I believe yani the government have tackled it quite well, managed quite well. We have basically the economy have benefited in so many ways from devaluations. Our exports have been skyrocketing, whether in services, products, and goods. Still a lot to take place. Tourism is and basically transfers from Egyptians living abroad have skyrocketed. And we see it in numbers. We see it in our foreign reserves, which reached across the 50 billion mark, which is all-time high in dollar terms. So in EGP terms, it's astronomical, of course, but we believe ourselves we are on track. We regained confidence in the market. Thanks to the reforms that I mentioned earlier. So that's my 2 cents on this.
And if I can add, actually, there are stocks that made more money than the devaluation in the local currency. So I think there was a way that you can even make capital appreciation in real terms, in USD terms, from the devaluation of the local currency, given that, so we've seen names that were up 10 times. And even there are the natural hedgers of the devaluation local currency. So there could be actually, if the emerging markets are seeing capital outflows, you can position your portfolio actually to be well positioned from such devaluations in local currencies, and to even make more money from such situations. So there could be a strategy that can capitalize on such environment. And going back to Thapelo, a question on the opening up to retail clients. If you can share again a picture about how much of it is retail versus institutions, and how the awareness is trickling into the local people.
Thank you so much, Khalil, and thank you for that question. With regards to retail versus institutions, obviously our market is dominated by institutional investors, and when you look at when you unpack participation from an investor point of view, we also have local representation as well as foreign investors participating in our market. But the larger portion of the market is accounted for by our institutional investors, pension funds, and the like. So that has been a major assignment for the BSC in order to activate retail participation in the market, because we do agree that retail participation is important for price discovery as exchanges are battling liquidity challenges that currently prevail. So we've had strategies to try and get retailers to participate and grow that segment, both from a local as well as a foreign point of view. So we have obviously issuances, new issuances are important in terms of bringing in new investors into the exchange. I'll give you an example. A couple of years ago, we had a listing from one of our state-owned enterprises, the first of its kind to be issued in our market. So what we saw happening was we had a lot of retail investors coming from that listing, up to 40% of the retail investors that we currently have on our register. So that was a huge success story, which is why we obviously are pushing for SOE listings. And in our engagement with issuers, we always encourage them to do roadshows so that they attract a good portion of retail investors. Yes. And then the other factor would obviously be the role of technology, being, trading apps. And we are introducing a trading app next month. We are at an advanced stage in introducing that platform so that we obviously are able to capture a good portion of retail investors. And then the other initiative that we have been working on is the Africa Exchanges Linkages Project, which is a project that is spearheaded by the Africa Securities Exchanges Association, which essentially tries to promote cross-border trading between African exchanges that are listed on that platform. So we're just hoping that with some of these initiatives, including obviously the fact that we have a strong relationship with our international community, we have an international strategy that we are aggressively pushing right now, because we do realize there's only a certain portion of retail investors you can get from our market. So we want to open up to the rest of the world so that we have investors coming into our market. So we have strong relationships with custodians where we, on an ongoing basis, provide them with information on our market, the latest developments and changes, so that everyone is aware and we keep the interest going in terms of investing on the Botswana market.
That's all music to my ears, to be honest. And if we jumped into from a regulatory standpoint, a question to Ssembuya, and that's a question from the Q&A box here. Which is more important from a regulatory perspective, investor protection or market development?
Yeah, very interesting question. I think for developing countries, both are important. Okay, so what you need to do is you need to strike a balance between protection and development. Okay, so the development should be done in such a manner that it doesn't harm investors. Okay, I think regulators by default are public interest entities. So your first role is to ensure that investors are safe and the investments are safe. But then at the same time, I think in the developed world, we also have a unique role to develop markets. Okay, so you just have to strike a balance between the two, ensuring that yes, you encourage innovation, but the innovation is done in a manner that safeguards public interest. Okay, so I don't use the word controlled, but the innovation should be in a controlled environment, so that you have a win-win. You have a win-win situation. Okay, the public is protected, and innovators are actually able to introduce innovations.
That's actually I'm 100% agreed on it. A question here that covers both Egypt and Botswana. So the question says, Egypt is under monitoring by MSCI indices. What activities are being undertaken to ensure inclusion increase the weight? And is Botswana actively pursuing MSCI inclusion given their membership of the Global Securities Organization?
I'll leave Thapelo to start answering, and ladies first.
Absolutely. In inclusion in these indices, obviously global indices is important for our market for visibility purposes, especially when we are trying to attract international capital. So this is an aspiration for us. It's something that we are currently working on. And under our work stream, again, under the partnership with the London Stock Exchanges, we are also pursuing FTSE. So I think these are the developments that will mostly come up in the near future.
Is there a minimum free float that you need to get to, or what are the key, I would say, boxes to tick into it?
Yeah, it's considerations in terms of, I think, company size mostly.
Yeah, right.
Yeah, from a market cap perspective.
Yeah.
Nothing else comes to mind at this point. Yeah, so.
Sure. Yeah. Khalil?
Basically, I see it happening, and all the stakeholders, starting with the government, are working towards this, basically to coordinate basically our size and to lift our size in the MSCI and FTSE indices. So that's a goal. That's a discussion taking place by the regulator, and of course the market is responding, and basically everybody who's able to support will definitely do that. What would that require, from my very humble opinion, is basically to deliver the pipeline of IPOs with free floats 20% above. Basically having liquidity tools, which is, I kind of mentioned it, the market making, securities lending, derivatives, to provide depth to the market. Already the pension and insurance company allocation is basically a pass through that. Tax neutrality, basically, or I wouldn't say tax incentives, basically unlocking any hangovers on any topic. Also, basically, developments on governance and governance rules and regulations, because this is quite important. It's not just an IPO and that's it. Investor relations and investing into that aspect, corporate governance and so forth, are all means to an end. So I see our market cap to GDP growing, and I see the plan, to be completely honest, and I'm believing in it, and I see action on the ground. This is what most. It's not just a plan; it is action on the ground.
Clear, Khalid. And then now switching gears to Uganda again, in terms of the diversification goals away from the oil and gas, and is there a target for the diversification in terms of GDP and the potential listings into the stock market?
Thank you. Actually, when it comes to oil and gas, we're just joining the club of crude oil producing countries in the next 6 months or so, and we expect that to have a transformative effect.
Okay.
In terms of infrastructure, we're setting up a sovereign wealth fund, which will be able to invest both domestically as well as offshore.
Yeah.
But I did allude to or I did discuss the tenfold growth, which is actually meant to shift the current, or to change the current structure of our economy, from a rural agricultural based economy to one based on value addition in as far as the agricultural sector is concerned. Oil and gas will also be a very key component of the new structure of the Ugandan economy. Then also trying to shift to a knowledge-based economy, so science, technology, will also be very critical, as far as trying to have a much more different structure as far as our economy is concerned. So I'd like to use the word structural, trying to change the structure of the economy. Now, what does that mean in terms of public offers and listings? Definitely an expanding economy, an economy that's going through a structural change requires to be funded or financed. I mean,
yes,
if you look at that very ambitious growth plan of growing our economy by almost 10 times, I mean, we need a huge amount of financing to be able to attain that.
Right.
Okay. And so capital markets will actually play a very critical role in financing that particular vision. And just to give you an example or a sense of what we're trying to do in terms of financing that particular ambitious plan, we are trying to reform the fixed income space. Okay, so we do realize that the government has to borrow. The private sector also will be turning to the fixed income space in order to raise capital. So we're undertaking reforms which we believe should lead to a lot more transparency, a lot more vibrancy, diversified products, more vibrant regulation of the fixed income space.
Yeah.
We have challenges in the pre-trade and post-trade transparency, and we believe with the necessary reforms, we should be able to see a much more vibrant market. And of course, if it's a lot more vibrant, more liquid, then cost of capital should come down. I mean, you get rid of liquidity premiums, you name it. Okay, so just to give you a sense of that. At the same time, we're looking at incentivizing the private sector to basically tap into market-based financing. Okay, so we're looking at I mean, is it tax incentives as a way of encouraging the private sector to examine or look at the capital markets as an avenue where you can actually raise capital at a lower cost. Okay, so incentives would also be very critical in as far as this is concerned. I think I saw a question around sustainability. I think that's an area that we realize will be very critical for the growth of our capital markets. I think that transition to a low carbon economy is actually underway, and it also needs a lot of financing. It needs a lot of capital to transition us to a low carbon economy. Okay, so we're actually developing a framework for green, social, and sustainability linked products as a way of providing a framework that issuers can tap into in order to raise capital that can be channeled into climate change mitigation, adaptation, you name it. I hope I've done some justice around the question.
Yes, Lala, that's to be honest, that's well articulated response. We have a question here on the family businesses where they always struggle to accept the idea of external funding. How do you think new reforms and advancement can encourage and stimulate external funding?
Can I try that?
Yeah, sure.
Oh, thank you. Now, I think when it comes to family businesses, and now speaking from experience, and having dealt with business owners and founders who are running family-owned businesses, I think what we actually need to deal with is mindsets. Okay, we need to see mindsets shift. Okay, I mean, if you look at the current mindset of a business owner, okay, this is mine. I need to control this. I need to pass it on to the next generation of my family. Okay, we need to keep it within the family. Okay, and consequently, as a result of that kind of mindset, most business owners fail to actually realize that, in addition to raising capital through capital markets, or in addition to raising capital by inviting external parties, you can actually build a business that, can live beyond you, the founder. Okay, I mean, if you raise market-based financing, there's certain positives that come with that, from improved governance, reporting, improve financial reporting, transparency, you name it. Okay, so I think it's very important for us to educate business owners, on the role that market-based financing can actually contribute to ensuring that they build businesses that last beyond them, or businesses that they can pass on from one generation to the next. Okay, so mindset shifts will be critical as far as dealing with family-owned businesses is concerned.
I think if I can add on to that note, because
Sure.
I really like that point that Ssembuya is making about targeting or coming up with key messages to obviously engage with these companies, because interestingly enough, family-owned businesses would I think where they're coming from, they would sort of be looking to preserve the legacy of their own companies. But what a listed environment provides is actually that and more, because you allow the company to even outlive its founder, operating obviously in an environment where corporate governance standards are present. So I think it's all about tailor making some of these messages so that obviously there's understanding in terms of what the benefits are. And what
Right.
we've seen in Botswana, we all know a lot of family-owned businesses that we've grown around. Some of them, as soon as the founder, God forbid, passes away, then
Yes.
the company would sort of collapse. So I think it's always important to obviously engage from a point of obviously telling or sharing with them that it's important to obviously preserve the legacy of that company beyond the founder.
That's clear. Thank you, Thapelo, for the follow-up. So we have a question on the initiatives that are being taken from the regulatory and market development, and especially on the individual investors. So he's saying that how easily can I, as a Zambian, buy shares in Uganda or Botswana stock exchange?
Mm-hmm. Well, unfortunately, and well, you'll allow me to respond first.
Yeah, sure, Ssembuya.
Unfortunately, it's a very tedious exercise currently, extremely tedious. And so you'll have to convert your Zambian kwachas into Uganda shillings. And when you are repatriating your funds, you need to do the same, buy kwachas, okay? And of course, that comes with a lot of risk. Now, and I'll share the East African experience. We were working on what is called the capital markets integration project, which aimed at connecting exchanges across East Africa seamlessly to allow for seamless trading across the region.
Yeah.
But one of the challenges we realized along the way was that, yes, it's actually a brilliant idea, but the foreign exchange risk doesn't go away.
Right. Yeah.
Okay.
Yeah.
So for that to really work, you need to have a common currency. Okay. And looking at the EU example, looking at West Africa. And so one of the things that's currently happening in East Africa, there's actually we've signed an East African monetary union. Okay. And so we expect by the year 2031 that we shall be able to have a common currency. And of course, with the common currency, it will take away the foreign exchange risk of trading across the EAC region. So in a nutshell, the foreign exchange risk will always linger around so long as you don't have a common currency. Okay.
Right.
And
I agree.
looking at the African Exchange Linkage Project, AELP, I think it's a good project in terms of trying to link exchanges across Africa. But again, the foreign exchange risk will always kick in. And I think, and now this is my opinion, I believe in regional blocks. Okay, you start at the regional level first before you roll out to the rest of Africa, and that's my opinion. That I think
makes sense. Yeah.
The proponents should have pushed for regional blocks. okay, or integration at the regional level, then if that was successful, then we could consider rolling this out across the region, because you can imagine how complex Africa is. I mean, 56 or 57 different laws and regulations, different cultures, etc. But I think regions usually have a lot of commonalities. Okay, so I believe in starting with the region before you roll out to
makes sense.
A continent-wide initiative.
Makes sense. Yeah. Another question here from the Q&A box about the ways of funding, given the growth that is expected, to be honest, across Africa. So a contributing factor is the reliance on the external debt. So his question, that's a question from Daniel, is how can the capital markets on the continent be positioned to help address this challenge? Please, our panelists, feel free to jump into it.
Nour, I didn't get the question well. Are you able to repeat the question?
Yeah, so it's mainly on the ways because of the growth that we are seeing in the African countries, which requires a lot of funding. So how can capital markets be positioned to help address this challenge?
Well, I can give a very broad response or generalized response. I think, to me, I would want to look at it in terms of access. Okay.
Yeah.
So here I'm looking at access for issuers or securities and access for investors or savers. Okay. So the question then becomes, what steps can you take in order to increase access for issuers or securities and to increase access for savers or investors? Okay?
Yeah.
And to me, if I'm to start with the savers, how do I increase access? Technology is one of increasing access to mobilize or mop up all the savings. Increased education or awareness can also be a tool that can increase access for the savers. Okay, then if I'm to flip the coin and look at issues or securities, how do we increase access? Okay, the legal regulatory framework will be a critical component. I mean, you need a really facilitative legal regulatory framework so that issuers can issue securities in a fast manner and in a cost-effective manner. You also need to educate them. They need to be aware of the opportunity. Okay, so just my 2 cents around that whole access idea. Just access. We just need to focus on access. How to increase access for issuers, how to increase access for investors with their pools of savings.
Makes sense. Yeah. And a question here for Thapelo and Khalil on the reforms that are taken in terms of privatization across the state-owned entities. How do you see these programs progressing in both countries?
Okay, let me give the Botswana perspective. From our side, it's been really good because government has been clear in terms of the intention to privatize. And as you can imagine, these are state-owned enterprises. The process is not as swift as what you would encounter with other types of issuers. So we are watching and following very closely and obviously supporting the processes as it goes. And we are also facilitating from a fixed income or debt perspective, where we've seen some of the state-owned enterprises obviously tapping into the fixed income space. A lot of them have issued bonds and I think in terms of obviously meeting some of their capital requirements, they've been able to from the fixed income side, because as you would know, Botswana is we've predominantly relied on diamond revenue, and with the current challenges that we are facing with regards to our fiscus, obviously our central government cannot support some of the activities by our state-owned enterprises. So they have been sort of pushed towards the capital markets so that they can raise their own funding. So yeah, the process is coming along, but it's not as swift as one would want it to be.
Regarding what's happening in Egypt, we have seen state assets governance being on the rise. We have seen more assets moving under the sovereign fund of Egypt to professionalize and crowd in private capital. We have seen the introduction of a new unit under the Prime Minister catering to this project. We have seen the start of a United Bank listing in 2024. And the government or the authorities, they have flagged 11 state offerings between 25-26. Bank du Caire, which was the third largest government bank, shifted from a direct sale to a public listing plan, and now it's on course. So we see a strong drive to this. So,
and do you think that 2026 will be a year of executing on the plan?
Definitely.
Okay. That's clear. Just as a reminder, if you have a question, please submit it in the Q&A box. We have one of my questions here was about the fintech and the digital onboarding of investors and its role in expanding the retail participation. I think we have a good example here in Egypt with one of the apps actually gaining a lot of momentum. So Khalil, if you can share your experience about this, and if Thapelo and Ssembuya have examples in respective countries.
Simply, I can safely say is that the number of retail investors in funds have grown tenfold since the introduction of the EKYC. And I wouldn't be exaggerating with this numbers. Partially is due to the ease of the process, and not all companies have adopted it yet, but also because of the realization of, and we touched based on that, the value of basically the capital markets that contributes to them as well. So it's a twofold thing. It's not just
right.
Digital onboarding on its own doesn't solve the dilemma, but also innovation in products, innovation in regulations, new regulations that eases the process, financial inclusion. The majority of new funds coming into the market, we use a unit price of 1 EGP just to facilitate it to our investors, to cater for micro investments or actually nano investments as well. With the introduction of digital channels, it makes the process much easier, to be completely honest. We asset managers used to deal with ultra high net worth clients in financial institutions, and that's more or less. But now we are shifting our paradigm. One last thing is Generation Z and Generation Alpha is the future. So basically, the only way to reach them is through digital channels.
Right.
And basically, the regulator have basically reduced the age of basically opening a bank account or a brokerage or an asset management account from 16 to 15. And there was a limit until they reached the age of 21. It was 10K. Now it's 40. So a lot of things happening on the ground.
That's a very good example. Thapelo, given that it's the market is mainly dominated by institutions, do you see upside from such EKYC?
Absolutely. I think it sounds good, but obviously that's not where we are currently, because
Okay.
we are still working on that platform to be launched in the next month. So I think it's something that we are here
Good.
to witness the
Good.
transformation of.
Yeah, it will be great to see it, to be honest. Ssembuya, would you like to add on Uganda? From a regulatory standpoint, because it's something that needs regulation, actually.
Yeah, I think number one, we're usually technology neutral from a regulatory perspective. So as a regulator, how you look at technology, you look at technology as an enabler of an activity that you regulate. And so if the activity is trading, or the activity is offering securities to the public, the technology just enabled that activity. So we do welcome innovations that will enable the activities that we regulate or that fall under our regulatory purview.
Clear.
Yeah.
Yeah, I think we can. I'll ask the same question to our three distinguished speakers, and we can conclude with this on what are the challenges that you think, if they are faced and resolved, would result in a transformation in the equity or debt capital markets that we can see in the next year or two, that could result in a transformation in respective countries. Thapelo, given that, again, back to the rule of ladies first.
Okay, challenges. Not really a challenge, but if we can make headway in terms of SME listings, I think that,
Okay.
in terms of SOE listings, that would be great. And when it comes to SME listings, if we can get enough alignment as an ecosystem to support SME listings, particularly from the asset management space, I think that would be great. And some of the issues that we work on would be around issues of alignment with policy, obviously enabling the capital markets to grow and support issuers and investors. I think if we can also make progress in that area. Other than that, I really look forward to what we can do given the current climate. And I think we've learned a lot as a market over the last few years with all of the global challenges, shifts that have transpired. So I really look forward to us being in a position to introduce innovative products and introducing innovative ways of serving our clientele, being issuers and investors.
That's clear and well articulated. Ssembuya or Khalil?
Yeah, I can go first before Khalil.
Yeah, sure.
I think if you look at the Africa Financial Markets Index, and the report came out, must have been a week or two back. Uganda moved from position 4 to 3. And if you look at the pillars that the Africa Financial Markets Index looks at, one of the pillars where Uganda is not doing well is around the capacity of institutional investors. And it specifically speaks to the pension sector. So I think for me, we need to really reform the pension sector so that, we can create those pools of savings that can be that can be channeled into the capital markets. Then another area that needs a bit of reforms is the bond market, the government bond market. Yes, we've undertaken the first wave of reforms, but we still need a second wave of reforms to, create liquidity, encourage transparency, and see a lot more vibrancy. And I believe, if we're able to reform, say, the government bond market space, then that should, provide a proper benchmark for the corporate bond market. And I think there's a lot of potential in a corporate bond market.
Absolutely.
Yep.
Absolutely. Yeah, I agree.
Yani, from my humble opinion, and that's for all markets, not the Egyptian market, is basically guarantee and demonstrate seamless FX convertibility, capital mobility, having transparent market clearing mechanisms, transparent monetary policy is what foreign investors are looking for. I believe all markets have been developing on catering for local investors.
Yes.
At this point in time. Probably most of the markets are looking for foreign investors as well. So I believe those are the 2 points that foreign investors would be looking for. Apart than this, I believe most markets are on track.
Yeah.
I see a better developments every day.
Yeah. Amazing. I just want to tell you that I really enjoyed this webinar. It was truly insightful for me, and I hope it was the same for the attendees. So I would like to thank everyone who joined, our distinguished speakers, and I love the idea of the collab between the African CFA societies, and I'm looking forward for more collaborations going forward. Thank you. Thank you, everyone, for joining.
Panelists and attendees, and thank you, Nour, for being so kind to us.
Thank you. Thank you very much.
Thank you, everyone, and thank you for your contributions. Nour, you've done a fantastic job in moderating. Thank you so much.
Thank you.
Thank you so much.
Khalil, great contributions. Thapelo,
Thank you.
great contribution.
Thank you.
Have a good day, guys.
Thank you.
Thank you so much. Bye.
Bye-bye.
Bye.